In this video, guys, we're going to look at trading setups in terms of filters and triggers. Stay tuned for this one. Hey traders, a very warm welcome to you. If you are a veteran to the channel, you're a subscriber, a very warm welcome back. If you're new, consider subscribing for more videos from me, other traders on this channel. We talk trading, we talk strategy, we talk discipline, psychology, all good stuff. We're all trying to become better traders. So if that's you, you want to become a better trader, join the club, hit the subscribe button now. Okay, enough self-promotion, let's get down to the video. Okay, so start thinking in terms of filters and triggers. What do I mean? This is part one, by the way. Make sure you are subscribed on a serious note, because I'm going to do multiple parts of this because I want to try and expand this topic. So if you've just hit this as a new video, subscribe. If you've kind of seen version 2, 3 or 4, come back, and this is welcome back to version 1. Anyway, let's get down to it. Filters and triggers. What do I mean and how do we kind of use these? So I believe a trading strategy, if you imagine you had your trading strategy here and it was strategy, number one, right? It's your number one strategy. This is not a trading plan. For me, a trading plan is a bigger, broader thing which contains multiple strategies. Strategies is a specific set of rules that you need to execute a trade. You utilize that, you find the right market conditions, you take that strategy and you bolt it in to an actual market and then wait for a trade to be triggered. So the strategy is going to include filters and triggers. What's the difference? Why do we do it this way? So this really is, I think, is one of the better ways of defining a strategy. You start off with a filter. So in other words, a filter is pretty much as it says. It means that you have to have these conditions met or not met, depending on how you're defining it, before you can move to the trigger phase. So you may well have many filters, multiple filters for your trading strategy, and you're only going to have one trigger. You may have a couple of triggers, but most likely you're going to have one trigger, something that activates, that actually makes you pull the trigger on the trade. In other words, click the mouse, execute the order. The filter is basically a filter flag system, whatever you want to call it. I've talked about flag systems before, where this must happen, this must happen, this must happen. You get a green light for that. Okay, now you can wait for that trigger. The trigger still may not happen, but you've got the filters that say, yes, we're ready to go. We are ready to strike now if the trigger goes. So there's a distinct difference between the two. Triggers can be going off all over everywhere, and this is the kind of trap I think a lot of traders fall into. They think that strategies are just these triggers, so they're pulling the trigger all the time, left, right and center. They're going long, they're going short, because they're saying, hey, I've got a moving average crossover, I've got a break of the high, I've got all this kind of stuff. Yes, but they're missing the bigger part of the puzzle, I believe, which is the filter stage. This is the stage where I think the money is made in the strategy. Let me explain. So a filter could be, and let me give you some examples and you'll see where I'm coming from here. So a filter might be the fast moving average is above the slow. We all know moving average crossover type stuff. If you don't, go and check out videos I've done before. Fast moving average crosses up above a slow moving average, indicates potential strength. That could be your first filter. So you might say, hey, this one, I want to go long, but I want to make sure that the fast, whatever, 10 period is above the 50 period, or 20 periods above the 200 period, whatever it may be. In other words, I want to have some sort of bullish filter that filters out anything that's just very, very weak. So that might be your first thing. Second thing, and by the way, I'm not saying that this is all, you should have these all together. It's just some examples of filters. Another one could be oversold on RSI or stochastic or CCI, whatever it may be. Some oscillator that's saying, hey, this is overbought, it's oversold. I only want to take a trade when we're in oversold territory or overbought territory. And number 3, you could have trading in upper Bollinger band, that is, so a Bollinger band or Keltner, same kind of thing. You're enveloping around the moving average. Bollinger band is standard deviation, Keltner is ATRs, but same kind of thing is, hey, I want to see that we're trading in the upper Bolly above that moving average, or we touched the upper Bollinger in the past 5 days, or something. Another thing might be the first hour of the day. That's another filter, not necessarily based on price or an indicator. These are all kind of indicator based. This is based on time. First hour of the day, because we have an idea that there's generally a lot of action in the first hour of the day as people trying to shove money into the market. So that could be your filter. If we're in hour 2, the filter's not active. In other words, it's not met, should I say, the condition is not met. Daily range is greater than the ATR. That might be a filter where you don't want to see. You want to see it less than the ATR, because if it's more than the average true range of the day and we start doing 200, 400 ticks, maybe conditions are different and maybe this strategy doesn't work very well. Day 4 of a trend, we've had 3 days of trending, we're in day 4. Perhaps that's a filter. The prior day was a very, very narrow range, very, very low compared to the prior 7 days, whatever it may be. Some ideas there, we could go on for hours on it, but you get the point. The idea is you take filters that are going to work for your strategy. If you're trading a momentum type trade, you might want to say, hey, I want to see that the moving average is above, that we've got actually positive bullish momentum here. I want to see that we've come off an oversold condition. I want to see we're in the upper Bollinger. I want to see first hour of the day. I want to see that we're whatever. You get the idea. We can have one filter or we can stack 2 or 3 together. The point is we're stacking filters that are going to work well with our strategy. So we add 1, 2, 3, and 4. Now, when we start to get extra complex, we might say, hey, we've got 5 filters. We want to see 4 of them met before we take the trade. The 5th one is optional, and maybe I'm going to trade more size on my 5th one. The point is you can start to grade and quantify your trades, and it keeps you out of rubbish trades, or helps keep you out of rubbish trades. You know, one obvious filter might be, hey, I just never want to go long. I've got a mean reversion strategy. I don't want to go long when we're in overbought condition. I don't want to go sold when I don't want to go short when we're in oversold condition on an oscillator. Very simple, very basic, very, very easy to do to stop you taking bad trades. So you can just have them like that. Or first hour of the day, I don't want to trade the first hour of the day because my strategy is this, whatever. You get the point. So the idea is we go along and we say, hey, these are the filters that I need for my strategy. Filter 1, filter 2, filter 3. You know, they've all got to be met. And we go, yes, that's met, that's met, that's met. Right now we're on to the trigger stage. Filters are met, checklist done, ready to pull the trigger. Trigger is executing the actual trade, long or short. We look at break of high. Again, just some ideas that come up the top of my head. A break of a high, that could be a 5-minute candle high, a 1-minute candle, 15-minute candle, daily high, all-time high, weekly high, yesterday's high, anything. Opening print, so the opening print of a new candle, a new 15-minute, 45, 60, 120, day, 24 hour, whatever it may be. Moving average crossover, as the moving average crosses over, that's a trigger. So see there, we've got a filter and a trigger. So the filter is just getting us into the trade, but the actual trigger, the filter is actually filtering the trade, allowing us to take the trade, but the trigger is the actual, yes, pull the trigger on the trade, so we can use it in 2 different ways there. Oversold to neutral, so that's an oscillator that's coming from an oversold condition to a neutral condition. As it crosses over that level, that could be a very finite level, pull the trigger. Notice these are all finite levels, actual price points that have to be touched for us to take the trade. So while this is broad, it's like, okay, if we're in oversold, which can be an RSI, could below 75 to, it could be anywhere. These are all actual levels where the price goes over a certain point. The high is a finite number, the opening print's a finite number, move average crossover is going to be a finite number. Oversold to neutral, again, on the oscillator, so you can extrapolate that with the price. Seller resistance is going to be a specific level, that's there. So these are when you execute the trade. The filters are met, now you wait for the trigger. Bang, we break the high, we've got our filters for our condition, we break the high, we pull the trigger. Okay, the reason we have this is it makes our life a hell of a lot easier, guys. Instead of looking for triggers all the time, always looking for triggers, we've got filters. And the beauty of this filter process is that we can add and remove filters depending on the market conditions we're in, the risk we want to take. If we don't want to take too much risk, we can add more filters and make sure we're taking what we perceive to be the nicest, juiciest trades out there. If we want to take more trades and want to have more volume coming through, prepared to take a little bit more risk, whatever it may be, we can loosen off the filters, let a little bit more through the net so that we're taking more trades, but we're using less filters, whatever it may be. That's the good thing, is we can adjust it to suit. So I really recommend looking at your setups in terms of filters and triggers. What filters do you need to see? What's your perfect conditions for the trade? That's another way to look at it. Conditions, what do I really love to see? How can I quantify it with an indicator or a price position or time or day or whatever it may be? What's the most beautiful thing I like to see? And then what's my trigger? Most people have the triggers already, but it's these filters that add the power, I believe, to your strategies. And the ultimate goal is you have a book of strategies with different filters, different triggers, and you pick and choose the right strategy for the right market conditions. You plug it in, you use it, you make some money out of the market. When it starts to not work as well, you pull it out or you adjust it, add some more filters, change and adjust. This is a much more focused and structured way of trading from a specific actual written down strategy. All right, guys, thumbs up if you like this kind of stuff. Subscribe if you haven't yet already. See you in the next one. Take care. Bye-bye.